So I think there's two types of inflation that we need to be aware of. One is this headline CPI-driven inflation that's being driven by supply chain constraints right now. That is different, and I don't think it really affects crypto markets per se. The inflation that drives crypto markets more so is the printing of money by central banks. And you can measure that by looking at the amount the central banks print and the effect it has on asset classes. It's actually highly correlated. And crypto does particularly well when the central banks are printing because of its limited supply. It has its scarcity value and it tends to rise, but it also rises exponentially because it has this call option on the future element to it as we're building out this new technological world. So it works at two levels and works much better than most other asset classes for this debasement of currency that's happening.
What if the central banks now doing the tapering and raising the interest rate? Isn't it a risk for the crypto market?
I think over time, I'm not sure how fast the tapering is still an increase in balance sheet, but just less of an increase. So it's reducing the balance sheet that would start to cause problems. I don't think we're anywhere close to that yet. My actual base case hypothesis is that next year, this big rise in CPI prices, commodities, goods and services, actually slows growth down. In a very indebted world, if you raise prices on people, they tend to spend less, as do businesses. So I think we actually will see slower growth and less central bank tapering or reducing of stimulus. So I don't think that's next year's story. If it is, it's the back end of next year. In the meantime, I think we'll probably get a bit of a growth scare during the first half of 2022. And that should continue, I think, to support the crypto markets.
Okay, so the inflation is not temporary, or the devaluation of our fiat currencies is going on the next years.
Yeah, I mean, on average, it's the central banks, and I use the G4, the ECB, the BOJ, the Fed, and the Bank of China, People's Bank of China. Those on average are printing about 15% a year. Now, there's periods of time where they don't, and that tends to be not great for asset prices. And then what happens is they come back again. I think it's an ongoing phenomena that will be with us for at least another decade because of this problem of debt and slow growth.
Take the money from the debt and invest in Bitcoin. Is it a safe bet or too risky?
Look, there are no safe bets in this world, but if you look at the adoption rate of crypto right now, it is the fastest growing adoption of any technology in all recorded human history. Back in 1997, the internet was growing at 63% a year with 150 million users. Crypto has about the same number of users and it's growing at 113% a year. So the network adoption of this entire digital asset space continues to grow. So not only is that the technological side, but if the central banks continue to print, the price should do particularly well. So, you know, generally speaking, I've switched 100% of my liquid net worth into the digital asset market. And there'll be times when I'll have less of a weighting, but right now it still seems the right weighting to have. You know, I've spoken to a lot of corporations about this, about, you know, why do they have stuff on their balance sheet? Why do the treasurers have cash? And when you ask them, it's really for a few things. One is to buy back their shares in the US. The other is to buy real estate, and the other is to buy other companies. And the problem is the debasement of fiat currency means that all of those things go up. Their own share price goes up, the cost of real estate goes up, and the other companies they want to acquire go up in value, and their cash doesn't because they get 3% return on their cash. So trying to get people to shift and realize that if you want to keep up with the appreciation of assets with your cash, because everybody's income is staying roughly the same, they need to start making this shift. So yes, I totally agree that it's sensible. Just depends how much risk you want to take.